as well too. But I don't know if you saw it, Pam, but there was a article out there on, it was actually on Forbes.com, about it's a Morgan horse breeder who was taken to court by the IRS and saying basically that they deemed his operation, his business, so to speak, as a hobby instead of a true business. And two of their main reasons for doing that, one was that he didn't have a business plan, or at least a written business plan. And the other was that he didn't, and to preface this, he was an accountant himself, but he didn't separate his business expenses and income from his personal, and he was a sole proprietor, so technically they don't have to do that. But can you speak to that a little bit, and talk about separating your personal expenses and your personal finances versus your business ones?
Sure. I work with a lot of clients that are trying to start their new business, and one of the things they tend to do is they take their personal income or their personal monies and use that to fund their business. And what you want to make sure you do is that you set up your bookkeeping so that you can track everything that is in reference to the start of your business. Now, I always recommend that if you're going to have a business, you should have a separate business checking account and a separate business savings account. And you want to make sure that the information for your business flows in and out of that account. It's also a really good idea to set up your own software, financial software system to track your business. And then once you get those set up, as you take monies personally that go into this business, you would be able to track it. There are various different ways, and I work with people all the time. If you have any questions, we could get into more detail. But if you want to track it, it would be due to or due from, and then you track as you put money in to the business or money that comes out of the business back and forth personal. Now, the reason you want to do that is just because the IRS is looking to see if you're really treating this as a business. So if you purchase equipment, you want it to be purchased using your business account. So if you buy a piece of equipment, write a check out of your business account. If you get a loan, make sure it's in the name of the business. And, make sure that you are treating yourself as a business owner and you're taking care of things. So if you have clients that you're creating invoices that have the name of your business on it, these are the things that the IRS looks at to see if you're a hobby or if you're a business. And people make the assumption that, I had someone the other day tell me that they were a hobby business. And I said, what's a hobby business? And she said, oh, I have employees and I pay workman's comp, but I don't make money. Well, that's not how it works. A business doesn't have to make money every time, but you have to run the business with the rules that the IRS has set up. And if you have any questions about what those rules are, you can go to irs.gov, and there is a section that actually will tell you what you need to do in order to have your business be considered a business and not a hobby. As far as business plans are concerned, one of the great things that Equestrian Professional has is it has a template that you can use for a business plan. There are several different things that a business plan does. There's an internal business plan that you use for yourself. It's what you set up so that you know the goals that your business is working towards. And it doesn't have to be very detailed. It needs to be specific for what you want to do. Now, if you don't have a business plan or you don't have a goal, how do you know what you're working towards? I mean, that's what you're in business for, is to reach your goals. Put them on paper, and that's what you look at to work at. It's a living, breathing document. It's one that you want to look at and adjust. And when you're making decisions, make sure that that decision is working towards the goal you have in your business plan. Now, there's a more detailed business plan that gets done if you are going out for financing. And that one is more detailed. It has projections. It has additional information in it. But if you want to see what a business plan looks like, go to Equestrian Professionals Library, download library, and see the business plan that the template that's set up in there for use. It's very helpful. And like I said, it's a living document. It's something that you work for yourself. And also, if you have it set up, it's something that you can show to your employees as well, so they understand what your goals are and everybody's working towards the same thing. So, I feel sorry for the breeder. It's not difficult to do, but the IRS is very working very hard to make sure that they're catching people that aren't treating their businesses correctly. And this is something that you can do to protect yourself. Get a business plan. Get a separate checking account, get a separate savings account, and make sure that you are creating a business, a true business that you're working through. Well, that was long. Sorry about that.
No, perfect.
Oh, Pam, by the way, there is something you should know.
What's that?
About the breeder. Do you want to tell him, Chad?
What's that? Go ahead.
What the breeder does for his day job?
Oh, yeah. I said he was an accountant on top of that. So.
Well,
he definitely should have known that.
So I'm just saying, it happens to everyone of us.
Yeah, what's the shoemaker's children have no shoes?
Exactly. Yeah. I think Larry is back on now. Say hi, Larry, if you are.
Hi.
Okay, good deal. Yep, we can hear you.
Great.
Okay,
yeah, I just wanted to ask you kind of if there's any, I don't know if you heard what Pam was saying or what we were talking about, but there was an article in Forbes, at least on Forbes.com, about basically a horse breeder who got tagged by the IRS for, basically being considered a hobby instead of a business. Even though he was, in all intents and purposes, he was acting like he was trying to make money, but he didn't have a business plan. He was losing money, and he didn't separate his accounting from that standpoint. What are some of the maybe red flags that the IRS looks for as far as tax purposes and things like that for horse businesses especially that may flag a hobby business?
Okay. Real quick, I'm a former IRS agent, 33 years. I now own the Equine Tax Group. Our major business actually is defending hobby loss cases. We do a lot of them, and they're complex and they're difficult. And when I look at them, Pam hit the two biggest areas: separate bank account and business plan. Got to have it. Going deeper, the next step is the quality of the experts you consulted in the business. How'd you get into it? Who'd you talk to? And who do you go to for advice in the business? And what I try to do is I try to size up, before I even take a case, I try to size up who they're dealing with. And so if you're in the business, it's important to deal with reputable people and people with, let's say, a pedigree. It's important to pay a little bit extra and use the good trainer. If you're a owner of horses, it pays to use the best veterinarian, not use the guy who is cut rate, because you want, if I'm representing somebody, I love it when they use a vet who's a professor at a college, who's written textbooks, things like that. The credibility of your experts is pretty important as far as the IRS goes. Another factor they look at, which we always write up, is your success or failure in other businesses. So if I take somebody who's, let's say, a businessman who's set up, 16 corporations and they've all been successful and he's made a lot of money, there's a saying in life: success goes to success. The presumption is that if you do well in 5 different businesses, that the 6th business you go into has they have a chance of being success than somebody who's, let's say, bankrupted 5 businesses. So, that's another thing you kind of look at in going into it. There's a saying that the definition of insanity is doing the same thing the same way and expecting a different result. And I find probably that's the biggest weakness in failing horse businesses. There's you'll ask clients sometimes, well, why are you staying with this trainer? The horses never go anywhere. You've never sold a horse at a profit. If it's a show horse, you're not doing anything at major shows. If it's a race horse, you're not winning significant races. And you typically get these answers like, well, I'm loyal to my friends. Well, if you're hiring your friends, in my mind, you got a hobby. And the agents are going to ferret that out. I always do resumes of the people who are being hired. In terms of horses, I go out and get independent appraisers to show that the horses have increased in value, even if they haven't been sold.